सेव किया था ना?
मैं सिर्फ इसलिए गया था क्योंकि उसने मुझे कॉल किया, that's it. But listen तो.
Save it for someone else.
जिंदगी में सेव करना जरूरी है, मगर जब बात पैसों की हो, सिर्फ सेविंग से काम नहीं चलेगा। इक्विटी म्यूचुअल फंड्स में इन्वेस्ट कीजिए और अपने सेविंग्स को आगे बढ़ने का मौका दीजिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
India's retail inflation eased to 4.7% in April as against 5.66% in March. With this, retail inflation fell below the 5% mark for the first time since November 2021 and has remained within Reserve Bank of India's tolerance band of 2 to 6% for the second consecutive month. In addition, wholesale inflation in April came at negative at minus 0.92%, the lowest in nearly 3 years. Today in this episode of Macro Sutra, we will try to decode whether all is good news. I am Yuthika, Associate Editor with ThePrint, and we have with us Radhika Pandey, Senior Fellow at National Institute of Public Finance and Policy. Hi Radhika.
Hi.
Radhika, to start with, can you explain to us why are we seeing a drop in inflation?
So we are seeing a drop in inflation mainly due to the base effect because if you remember in April of 2022, inflation was very high because at that time it was the peak of the war period. So inflation in April 2022 was almost 7.8%. So one of the reasons for the decline in inflation is the high base that we saw in April of 2022. But the other reason is also that now commodity prices have started to ease. So that is getting reflected in the CPI in various components. Also, food prices have come down, particularly cereals prices, which were a cause of concern till a few months back. Particularly wheat prices were skyrocketing. They are still elevated, but they have come down because of the government's open market sales scheme, where they introduced, they offloaded their wheat stock in the open market so that the prices can be cooled. So that is one reason. The other, as I said, base effect is a very prominent factor at play, and it's going to have a role in the May inflation numbers also, because May of last year was also very high period inflation. The other is food prices and commodity prices decline.
Okay, before getting to the next question, there is one question that I'd like to take from a subscriber. The subscriber has asked, don't you think that this decline is a natural phenomena since there has been continuous rate increase by RBI? People's personal income have reduced because of layoffs and job cuts. And do you think inflation would reduce further if job cuts keep happening?
See, we have to understand that the nature of inflation right now that we are facing is mostly due to external headwinds. If you look at one is, as we mentioned, we talked about the base effect. That's a very important factor. The other is the easing of commodity prices, food prices. So it's not so much the layoffs that could be understood as a factor in the US, where we are talking about labor market tightening. But here the main factor is the implications of global headwind, input cost pressures getting transmitted to output prices and so on. So those were the factors. And now another factor which we can talk about in detail subsequently is that services inflation is still elevated, because services were impacted by COVID were impacted by COVID, and now the pent-up demand has led to increase in demand for services, and it's been sustained. So services inflation is something which is picking up not only in India but globally. We are seeing a kind of a compositional shift in inflation from goods inflation to services inflation. So those are the key drivers, and those need to be thought through, those need to be considered. The other is the oil price hike. So we are very much impacted by what happens in international markets on crude oil prices. So once these start to decline, we have a lower inflation, we have a lower wholesale price index based inflation, and then few months later it transmits to retail inflation, so that also starts to fall.
So RBI governor just very recently said that war on inflation is not over,
Yes.
and there are, especially he mentioned weather-related uncertainties. So do you think that this decline in inflation is sustainable, or it is a short-lived phenomena?
So that's the thing, what's happening is that because we have seen 2 months of easing of inflation, markets have become overly optimistic that now inflation will cool further, and therefore in the next couple of months the central bank should start cutting rates. That is something a very premature view, and we need to understand possible emerging risks to the inflation outlook. So right now everything seems fine, but just if you look at the last 2-3 days, a lot of developments have happened which could have an implication on inflation outlook. We see oil prices have again started to rise because Saudi Arabia's minister said that he warned that those who are thinking that they're short sellers are thinking that oil prices will come down, they should be in for more pain. So this is fueling speculation that in the next June meeting OPEC Plus will further cut production. They've already cut production in April. They could cut production further. That could lead to crude oil price hike. As crude oil price hike rises, it has second round impact on others. So that is what he said, that war against inflation is not yet over. And particularly he mentioned the impact of El Nino. That El Nino factor is still playing out. We do not know. It's very uncertain what will be its impact. It could lead to a weak monsoon, and therefore agricultural production could be subdued, and that would again lead to escalation of prices. So very rightly he has emphasized that, and it gives a very clear signal that do not expect rates to be cut anytime soon, because there are emerging risks to inflation outlook.
So we do have a RBI monetary policy meeting next month.
Yes.
So we expect status quo to remain, and also you mentioned some factors, but what are the other factors that RBI usually looks at before changing rates?
So they they look at global factors and they look at domestic factors. One of the main factor they look at is agricultural production and weather-related conditions, and there they have already made it clear that the implication of El Nino is still uncertain, and it could play havoc with agricultural production, and therefore rural inflation could increase again. So that is one. They also look at what's happening in other countries, what's happening in globally, what's the scenario on inflation. So if we look at there, US inflation decline, but only yesterday the UK inflation figure came out, and UK's core inflation was at 31-month high. So again it shows that inflationary tendencies are still very much entrenched, and therefore central banks need to pursue tight monetary policies. So those are some of the things that the RBI looks at. RBI also looks at inflation expectations of households. They also look at PMI, the Purchasing Managers Index, which we normally use as a gauge to understand manufacturing sector activity, services sector activity. But they come up with a very important indicator on input prices and output prices. It's a survey where survey participants are asked, do you expect input prices to rise? Do you expect output prices to rise? And there, the services participants, the companies who belong to the services sector, they have very clearly stated that they are experiencing intensification of input price pressures and output pressures. So now if services inflation starts picking up, what is problematic is that they are not very sensitive to interest rate changes. When you raise interest rate, it will have an impact on goods inflation, but on services it takes time. So those are some of the factors that we've talked about as some of the risks that may emerge. Oil prices, what's happening to the trajectory, In the US, what's happening is that the stockpile of inventory has come down drastically. For the week ended May 19th, it came down drastically. And now they're starting with their what is called the peak travel season. So that will again lead to increase in demand and squeezing of supplies. So all these factors, oil prices, weather conditions, agricultural production, demand conditions, services related indicators, they all shape up the decision to whether keep the rates status quo or to raise the rates.
You briefly talked about US and UK, but generally we have been seeing past couple of months inflation has been a global phenomena, increase in inflation. So this recent decline, is it a very India only phenomena, or do we expect it to happen in other parts of the world?
So it's a very interesting thing that's happening now is that globally what we are seeing is that the drivers of inflation have undergone a change. Earlier, the drivers of inflation, as I mentioned, used to be goods inflation, energy prices, crude oil prices. Now it has shifted to, the drivers have shifted from goods to services inflation. Because now with the opening up, people having more income, labor market still being tight, the demand for services have started to rise. So that is what is captured in the core inflation number. So even while the headline inflation numbers, we are seeing a decline, though not at a very fast pace, but yes, there is a decline, which is mainly accounted for by decline in energy prices, which were the main driver during the war. So that driver has come down, but there are other drivers that need to be monitored. And what's happening now is that there is a distinction between headline inflation and core inflation. So headline inflation is coming down, but core inflation is something that still needs to be monitored by the central banks.
Okay, I'll switch to some audience questions, Radhika, now. An audience member has asked that RBI governor recently said that India might reach 7% growth rate this year. What do you think are possible reasons for this statement? And considering the fact that US and other developed countries in Europe are now heading towards recession, why do you think that he might have said this?
So he's looking at a couple of high frequency indicators. So he mentioned that RBI looks at a bunch of high frequency indicators. They look at almost 70 indicators which assess the state of the economy, and there they have seen that there was improvement in those indicators during the Jan to March quarter, and even in April that momentum is sustained. So if we look at, say, GST collection, we look at PMIs of manufacturing and services, we look at air traffic, we look at vehicle sales, all these indicators are picking up, and encouragingly the indicators for rural demand have also started to pick up. Some of the investment related indicators have also started to pick up, like capacity utilization is now inching towards 75%, which is the normal thing. And then the private investments are also picking up through increase in new projects, and completed projects are rising. So, and finally he's saying that while US faced a spate of banking crisis, Indian banks are still healthy, and therefore our bank credit is still strong. So those are some of the factors which give him this impression, is this assessment that economy might grow at more than 7% in 22-23. We'll have the numbers on 31st of May, so it'll get more clearer.
Right. And the next question that we have been asked is, what according to you is the best combination of inflation rate and GDP rate that the government should target to maintain its target of $5 trillion economy?
Yeah, so here one should look at medium-term growth prospects, and as regards inflation is concerned, the objective should be to maintain a low and stable inflation. What is not desirable is to have a very volatile inflation. What is desirable to have is a stable inflation that would help in anchoring the inflation expectations of households. Regarding growth rate, we have a very important paper which was released by the International Monetary Fund recently, just a couple of weeks back, and they have tried to present an assessment of medium-term growth for the Indian economy. And they have said that in the medium term, given these headwinds, we first had COVID, then the war disruption, if the economy is able to achieve a medium term growth rate of around 6%, from say 2023 to 2027, it will be optimal. And they have mentioned a set of reforms which, if the economy and the government implement, it will help in attaining a 7% growth. So some of the reform they are mentioning is improving the female labor force participation rate, providing more youth employment opportunities. So basically what they're saying is that, in a production function approach, you have like output is influenced by labor, capital and productivity. What's happening is that India's growth is being driven by capital and by productivity, not by labor. So even though we have a demographic dividend, it's not getting translated into higher output growth. So what is needed is, in the medium term, we need to improve the productivity of labor. Human capital needs to be emphasized. So just to answer this question in brief, 6 to 7% is a optimal growth rate given the headwind. And regarding inflation, it should be low and stable. We already have a guidance of 2 to 6%, but the ideal number is 4%. If we are even not able to attain 4, but at least 5% should be something that the RBI can strive to attain.
Okay. The next question is, with global economy slowing down and India targeting lower inflation, will India be able to sustain growth?
Yes, so definitely there are these headwinds, and we've already seen our exports getting impacted due to recession-like conditions in US and EU because of the debt crisis stalemate in the US, where they've still not decided to increase the debt ceiling, banking crisis. So all these are having an impact on the economy in terms of trade flows, because our US and EU are our major trading partners. So export will contract, but if we are able to counteract that decline by higher consumption levels, by improving the rural economy, then the growth can be maintained. Which is what the RBI governor also said recently, that in the first quarter, growth will be driven by consumption. So and that is something that our economy has a strong consumption base, domestic consumption base, and that can help in insulating the economy from external factors.
Okay. Our next question is also related to supply side largely. The subscriber has asked that, we have Russia-Ukraine war, which is continuing. US deficit is not going to come down apparently. And so we have to live with this reality. And so don't you think that our supply side should increase to keep inflation under control?
Yes, so inflation, as we talked about earlier, also is mainly due to supply side disruption, due to trade disruptions, and we're not having timely delivery, supply chains broken and so on. So supply chain is a very important factor in cooling inflation. And therefore what is important is that India becomes part of the global supply chain infrastructure. It integrates. And whatever recently we have seen a spate of schemes like the production linked incentive scheme. So all those could help in improving the potential of the economy. But what needs to be also done is to diversify our trade, and not to rely only on only advanced economies, but to help seek more markets and to diversify our exports. So that will help in integrating, that will help in improving our supply chain infrastructure.
Great. That is all for today. Thank you so much, Radhika, for joining us, and thank you so much for joining us. We'll see you again next week.